In fact, we've got DK Joshi, the principal economist at Crisil, joining us on this story and what the finance minister and the economic affairs secretary had to say. Mr. Joshi, thanks so much for joining me. My first question to you is on inflation. From food has become fuel, and the fuel increase only happened around the 13th of September. So is that figure going to get worse going ahead?
Absolutely. This only factors in half a month. The impact gets built into half a month data. So I think when we have next month's figure, the fuel inflation will go up further. And I think the currency appreciation will, if it continues, I think will show some impact on crude prices, and will also get reflected in petrol and other items. But I think overall the story on the fuel front is that there will be price increase, and I think if you stretch it further to items like electricity, etc., where we are seeing continued upward revisions, I think all of them will get reflected in wholesale price index, and I think that's also going to keep the pressure on inflation high. So I think we should see pressure on inflation continuing, and it should cross 8% in the next month, and I think inch closer to 8.5% thereafter.
That's way off what the RBI's target is, Mr. Joshi. But before I come to that million-dollar question on what happens on rate, a quick take on food inflation. That's been the bugbear, but do you think this cooling off is a seasonal aspect, or do you think we've seen the worst over?
Well, I think the food inflation, I think there isn't much upside, but the story is mixed if you look at within food items. Where the pressure will emerge from is particularly oil seeds, edible oils, etc., where the production has not been very good. And some of the initial impact of poor monsoons is wearing off as the rains improved. So core cereals and pulses, there will be some upside to their growth. But overall, I think, let me put it this way, that the initial risk of surge in food inflation is not there anymore, because I think rains did improve. But given that the Kharif output is still expected to be 10% lower than what it was last year, I think it's not the food inflation will have some pressure, but not as much as was anticipated earlier.
Okay, Mr. Joshi, the big question really, the government expects the appreciation of the rupee the strength in the rupee to actually bring down inflation and hence be a cue for the RBI. Do you see that as a possibility, or do you think that's a long shot?
Well, I think all said and done, inflation continues to be high. Even the core inflation is at 5.5%, which is above the threshold. So I think from the inflation side, there's not much respite, though we might see some cooling off towards the end of the fiscal year. But I think that may not be enough to trigger a rate cut immediately. So I think I would say that the central bank could hold on to its policy, and I think they could continue to be on the pause mode as far as the repo rate is concerned.
So you're not buying the logic that a change in the rupee, strengthening the rupee, will actually bring down inflation substantially, as the government believes it will?
Well, no, it will. I think it will definitely have some impact. I mean, there's no doubt about that. But I think what we have also seen is that there is suppressed inflation in fuel. I mean, actually the fuel prices need to be raised further, I mean, if you want to take the fiscal stress off. So I think in that scenario, some easing of currency is not going to have a material impact unless the currency comes down sharply and stays there for a few months. I think we will not see. But clearly, I think the pressure from the weak rupee is off, but it's still not enough to give comfort on the inflation front.
Okay. The RBI's target for inflation is 5.5%. According to you, it will be around 8.5% before it starts cooling off. So, Mr. Joshi, what are the options before the RBI? Because in a sense, after that spurt of reforms, all eyes seem to be on the central bank on trying to, revive the consumer sentiment. Do you think it has the legroom to do anything on that front?
Well, I think from the inflation front it doesn't, but yeah, the positive steps taken by the government on the fiscal front did, and I think also the upward adjustment of fuel prices, they do create conducive environment for central bank to cut rates. But I think these measures will take time before they have an impact on inflation, and they need to be supported by other measures as well. So I think right now the headroom before central bank to cut rates is very, very limited.
Okay. Okay, we leave it over there. Thanks so much, Mr. Joshi, for joining us. So, an economist's take is that a rate cut is still far away because inflation continues to be a problem, and the fuel inflation could get worse because it's been suppressed and it is not really reflective in the numbers that we've seen for September. We head into a short break, but coming up, two big corporate